Smart money was impossible until I found this scalping strategy.
In today's video, I'm going to be breaking down this 11-hour trade using smart money concepts and the exact strategy that I use consistently to pull out the same trades over and over again. So we're going to get right into it and we're going to go straight into the 4-hour time frame. I always start my analysis on the 4-hour time frame. The 4-hour time frame gives me my overview of what to expect from the market. So with that said, the first thing we're going to look at is market structure. Now, here was our most recent low, most recent high, and then a low. That actually made a lower low. If we move across to the left-hand side, you will see that this was the low that was broken, and that forced a lower low. Price then put essentially this level of pullback, and this ended up being the lower high. Price then actually broke structure once again right here, and that then was our lower low. So price was essentially from a swing perspective ranging from this high to this low. So we was expecting when price starts pulling back to come back into somewhere in and around here before then going and putting a new lower low. So that's my overall understanding and knowing of the 4-hour time frame. So I'm going to mark this out right here as my week low, as would you. So that is a 4-hour level that you could essentially look to target. So once I have my 4-hour analysis understanding, I want to then drop down to the 15-minute time frame. The 15-minute time frame is a super key time frame for me because that is actually where I actually draw my analysis and my points of interest to actually take trades out of. So we're going to actually pull it all the way back to, let's say, let's pull it back to here. So let's go ahead and get rid of the drawings so I can really show you why, in fact, it is that we were able to identify this trade. So essentially, as we can very clearly see, the 15-minute time frame is bearish. We have, low, high, lower low, lower high, lower low, pullback. This ended up being the lower high, and then a new lower low. So we are bearish. That's the first thing we need to identify. We are in fact bearish. We're bearish on the 4-hour, we're bearish on the 15-minute. So we want to mark out the highest high that we're currently ranging from, because at all times we're ranging from a high and a low. It's our job to identify what high and what low. Because if we're bearish, we need to identify the high that is in strength, which is this one. This high is strong because it broke this low. So we are not expecting the price to break this high. And then we need to identify the low because that is essentially going to be our take profit level. And that is right here. So now we have that, we essentially need to understand, okay, where did price recently break structure from? So here is our break of structure. Break of structure to the downside, and now we need to identify where did price break structure from? What point of interest? And of course now if you've continuously watched Prosperity Academy, you know by now that this is our point of interest. Essentially when price gets into here, we're going to go down to the lower time frame. So you would wait for price to get there, and also very important to mark out key areas of liquidity. Point of interests are always better when there are areas of liquidity to target. So all of these highs in here throughout the whole level, lots of traders are looking at this level as an area of resistance, or they're looking at it as, equal highs or relatively equal highs, or key levels, however traders are looking at it. The point is there are lots and lots of liquidity sat above this level. So we know that once the liquidity gets swept, that will clear out the orders for the banks to then come in and do what it is they do best, move the market to where they want to move it to. So what you usually need to see is a run on one side of the market before the run on the other side of the market, because this is the trick that gets the 95% of traders that lose money out of the market. Key point there. So once we get into our 15-minute point of interest that has broken structure, we're then going to drop down to the 1-minute time frame. The 1-minute time frame is the time frame that we actually take our entries. So we need to understand and map out the key internal structure on the 1-minute. So for me, I would say we have a high, a low, a lower high, a lower low. A lower high, at this point you would probably be expecting a lower low. Instead, price gives a higher low and then a higher high, break of structure. And then price pulls back and puts in a higher low and a new higher high. Again, same key principle as last time, mark out the low and the high. Now, if price wants to stay bearish, and maybe it does, then, if price wants to stay bullish, and maybe it does, then price should react from this overall area of demand. If it doesn't, then there are more sell orders than there are buy orders. And once we see that, that is our confirmation that we want to get involved in the market and go with the 15-minute time frame. Because the 15-minute time frame is already bearish, we are expecting at some point that the 1 minute will shift bearish to match the 15-minute time frame. Because the higher the time frame, the more value that the analysis has on being correct. With that being said, essentially then it's just a waiting game. Price then comes into our area of demand and eventually has a change of character. The change of character is essentially what determines that the market has truly shifted. Change of character, we've gone from bullish to bearish. That is the change of character. Now, usually this is where I would take an entry, but as you guys can very clearly see, there is no clear point of interest for me to take my entry. So in that situation, and there are many of those situations, essentially what you would wait for is some internal structure and then a new shift, and then hopefully there leaves a point of interest in behind there and you can get involved there. And so let's take a look at essentially how that looks. So again, going very key into the small details. We have a high, we have a low, we have a new lower high, and then a new lower low. And then price puts in a new lower high and a new lower low. And then a new lower high and a new lower low. So price is, as you can very clearly see, bearish. Essentially there is the shift, higher high. So at that point now, what we're waiting for, because the 1 minute has shifted back bullish, because it's putting in a pullback, we would now wait for our realignment. And the realignment is going to look something along the lines of this. So price puts in a low, high, higher high. Once price puts in the higher high, same principle, ranging from the low, ranging from the high, we need to see again another change of character. So there is our change of character right there. Once that area of demand gets flipped, because in reality, if price wanted to continue going up, it would have never broke this low. So because it broke this low, it has confirmed to us that price is actually going to continue down, or at least the highest probability is that. And in this situation, you can very clearly see there is a clear level of supply for us to take our trade from. We're going to go ahead and put our trade entry on, stop just above, granted 3 pip stop loss. Give yourself a little bit of room to breathe. I mean, that's overall 2.6. Put yourself 3.3 to, you know, cover spread and any kind of liquidation that may happen. And then you're going to target what? The 15-minute low, because we've already outlined it. Again, our second target is down here, which is the 4-hour low. So how we're going to manage this trade is we're going to take off 80% at the 15-minute low and leave the rest running at break even to the 4-hour low, because maybe it will hit it. That is essentially how you build an entire trade idea using these smart money concepts. And now we're going to just allow the price to eventually play out and see how that plays out. So essentially price, you see it ranging, it builds up liquidity and then sweeps and runs on the liquidity, tagging us into our entry. And if you guys watching this at home right now want to learn how to master these concepts, we have now new spaces to enroll in our newest program that has a guarantee to get you funded or you don't pay a penny. Go ahead and check that down below in the description.
I have added a AI voice to this video so that you can hear the sound clearly.